Welcome to Explain the Charts, where we break down the latest market data and news for your favorite tickers. It is Monday, April 13th, 2026, and today we are focusing on Tesla, symbol Tesla, which is currently outperforming a weaker broader market. Tesla shares opened the day around 350.01, and as of this recording, they are trading near 352.11, up about 0.9%. The primary catalyst for this morning's move is a significant regulatory milestone in Europe. Dutch authorities have approved Tesla's supervised full self-driving system, signaling a potential EU-wide rollout. This news is being viewed as a massive growth catalyst by bulls, though the stock has been under heavy pressure recently. Over the last 3 months, Tesla has declined over 21%, primarily due to soft delivery numbers and margin concerns. Specifically, Q1 deliveries came in at 358,000 units, missing analyst expectations and creating a sharp sequential drop from late 2025. Adding to the bearish sentiment, some analysts have warned of a potential $3 billion cash hole and ongoing insider selling. Today, we will see if the technicals suggest a reversal or if this is just a temporary bounce in a larger downtrend. Let's look at the daily chart to get a sense of the long-term trend and where the major pivot points lie. Looking back at December 2025, Tesla hit a high near 498.80 before entering a significant corrective phase. We saw a massive gap down in early October 2025, where the price plummeted from 470 to the low 400s in just 2 days. The current price action is hovering near the lower end of the yearly range, with 340 acting as a psychological floor. Note the high volume on the down days in late February and early March, indicating strong institutional selling during that period. However, the volume today is relatively steady, suggesting that the sellers might be exhausted at these levels. We are currently 156% above the 52-week low of 222.79, but we remain 70% away from the 52-week high. The daily candles show a series of lower highs since the start of 2026, which is a classic bearish structure. To change this narrative, bulls need to reclaim the 380 level and hold it as support on the daily time frame. The next earnings report is scheduled for April 22, 2026, and that will likely be the ultimate decider for the next major trend. Dropping down to the 1-hour chart, we can see the more immediate price fluctuations following the delivery news. On April 8th, we saw a sharp decline to a low of 339.67, which corresponds with the broader market's geopolitical anxiety. Since that low, Tesla has formed a ascending base, slowly climbing back toward the 355 area. There is a visible cluster of resistance between 372 and 381 that capped the rally in late March. Every time the price approached 380, it was met with aggressive selling, forming a clear resistance ceiling. On the support side, the 340 to 345 zone has held up 3 times in the last week. This creates a trading range that we are currently sitting in the middle of. If the hourly candles can close above 358, we might see a quick run back toward that 372 resistance level. The correlation between the regulatory news and this hourly recovery is undeniable. Traders should watch the volume during these hourly breakout attempts to confirm the strength of the move. Now, looking at the 15-minute chart for April 10th and the start of today, we see a very controlled upward trend. Notice how the price consolidated on April 10th around the 345 level before a late-day surge. This surge pushed the stock into the 351 range right at the close, setting the stage for today's strength. The intraday VWP, or volume-weighted average price, has been trending up, which is a bullish intraday signal. Short-term support is currently sitting at 348.50, which was the previous peak from early April 10th trading. As long as we stay above 348, the intraday momentum remains in favor of the bulls. We are seeing smaller candles and lower volatility here, which often precedes a larger breakout move. The 15-minute timeframe highlights that the Iran bump from previous weeks has faded, replaced by FSD optimism. Watch for a break above 355.40 on this chart to signal a move toward the 360 psychological level. If we break below 346 on this time frame, the morning's gains will likely be erased quickly. Switching back to the hourly view, let's discuss why you might be bullish or bearish at this juncture. The bullish case rests on the Model Q rumors and the European FSD expansion providing a new growth pillar. If battery technology advancements continue, analysts suggest a re-rating could push the stock back to all-time highs. From a technical standpoint, the successful defense of the 340 support is a huge win for the bulls. On the bearish side, the fundamental cash hole of $3 billion cannot be ignored. If the company continues to miss delivery targets, the high valuation of over $1 trillion will be hard to justify. Short-term traders are likely looking to short the 372 resistance if the price shows weakness there. Long-term investors, however, might see these dips near 340 as a generational buying opportunity. The market is also pricing in a potential U.S. recession by early 2027, which adds a macro layer of risk. Tesla is currently a battleground stock with high conviction on both sides of the trade. To recap our analysis, the most critical price level to the downside is 340, followed by the 52-week low of 222. To the upside, 372 is the first major hurdle, followed by the $400 psychological and technical resistance. I predict a 60% likelihood that Tesla stays within the 335 to 375 range until the earnings call on April 22nd. A daily close above 372 with high volume would reinforce a bullish breakout toward 420. Conversely, a break below 335 would likely trigger a sell-off toward the $300 mark. Keep a close eye on any further news regarding the Model Q or the SpaceX merger speculation. Geopolitical developments in the Middle East also remain a wild card that could impact broader market liquidity. In summary, wait for confirmation at the key levels we discussed before committing to a large position. Thank you for watching Explain the Charts, and make sure to subscribe for more in-depth stock analysis. This video is for educational purposes only and is not financial advice. Always do your own research before investing.